Welcome on AML Study by Sohail. So today our topic is international trade activity. I will discuss in a detail how money launderer used international trade for money laundering and which different tactics they are using to launder their money. So today our learning object is international trade activity. We will discuss in detail what is the international trade activity, free trade zones, and detail will discuss the what is the actually free trade zones and how they function their activities. Trade based money laundering, then letter of credit. How can letter of credit used in trade based money laundering? Funnel account. How can affect funnel account? Then at the end we will discuss black market peso exchange. So first of all, we will what is actually international trade activity. International trade activity is a critical to an integrated economy and involve numerous components that can be manipulated for the benefit of money launderer and terrorist financing financiers such as banks, currency exchange, free trade zones, cross-border payments, ports, invoices, goods, shipments, shell companies, and credit instrument. We already discussed in detail banks. We already discussed in detail in MSB like currency exchanges houses. Today we will discuss free trade zone, cross-border payment as well. We discuss in details ports and invoice goods, shipments, and shell company and self company. I will explain next video in detail. So almost there is only one topic is pending shell companies. That one I will explain in later, and the rest all the things if you follow my previous videos, I think you will very well understand what is these concepts. So the oftentimes are inherently complex transaction, trade based money laundering and the black market peso exchange. So there is two things involved. One is trade based money laundering and second one is black market peso exchange, are two significant money laundering techniques that have proven successful in illicit finance. Typically free trade zone are manipulated in both techniques. So first we will discuss free trade zone, then we will discuss trade based money laundering, and in the last we will discuss a black market peso exchange. Free trade zones with it's more than 3,000 free trade zones all over the world, and it's also 135 countries. So free trade zones play an integral role in international trade. Free trade zones are designated geographical area with special regulatory and tax treatments for certain trade related goods and services. Free trade zones are often located in developing countries near port of entry, but are separated from traditional ports of entry and typically operate under different rules. That is the major difference between free land and free trade zones. There is typically operated under different rules. Most major free trade zones are also located in regional financial centers that link international trade hubs with access to global financial market. There is a mentioned two example: Colon Free Trade Zone in Panama and Shanghai Free Trade Zone, officially the China Pilot Free Zone in China. So actually major thing is that they operate under different rules, so keep it in mind. So according to FATF March 2010 report on the money laundering vulnerability in free trade zones, systematically weakness for free trade zone includes inadequate AML CFT safeguards. Yes, because the regulatory body is not actively monitor the free trade zones. Comparatively, if the organization is working in mainland, they are more aggressively they are monitoring that organizations, that suppose banking sectors, that companies, that organizations. But if free that one is in free trade zone, because in free trade zone the law is totally different comparatively mainland organization. So then we can say inadequate AML safety safeguards, minimum oversight by local authority, because there is a different laws in free trade zone. How can local authority go and check their as per their policy? But it's not possible. So as well, this one will affect the violations. Weak procedures to impact goods and legal entities, including appropriate record keeping and information technology system. Of course, because there is an not a, as well, there is a weak procedures, lack of cooperation between free trade zone and a local custom authority. Yes, because you are declared that area is a it will work as a free trade zone. So how can local custom authority influence on that areas, that zones? So it also like you can say there is a lack of cooperation between them. So next one is trade based money laundering. So trade-based money laundering, FATF define trade-based money laundering the process of disguising the proceeds of crime and moving value through the use of trade transactions in an attempt to legitimate their illicit origins. Money launderer can move money out of one country by simply using their illicit fund to purchase high value product and then export them at a very low price to a clothing foreign partners, who then sell them in the open market at their true value to give the transaction an air of legitimacy. The partners may use a financial institution for the trade financing, which often entails letters of credit and other documentation. So I think you are now getting my point. What is actually trade-based money laundering represent, and TBML represents an important channel of criminal activity, and given the growth of world trade and increasingly important money laundering and terrorist financing vulnerability. Moreover, as the standards applied to other money laundering techniques become increasingly effective, the use of trade-based money laundering can be expected to become increasingly attractive. The Hong Kong Association of Bank, with input from the Hong Kong Monetary Authority and understanding the commercial purpose of an trade transaction, is a key requirement in determining its money laundering risk. The guidance refer to 6 ways to execute trade-based money laundering. Okay, how can money launderer launder their money in? They are using 6 ways. What is it? Over invoicing or under invoicing? They present comparatively much higher price, either much lower price. The difference, because they don't want to actual sell that product. He just want to manipulate figure of amount, which amount he want to launder. So launder will do over invoicing and under invoicing. Over shipping or short shipping. Yes, the launder can ship comparatively more. He just present the documents, and in documents he mentioned he just export the like a 100 metric ton any product, but actually he just export 1 metric ton. So there is a difference is 99 metric ton. So in this way, the launderer can launder the money, because they are showing the different value of shipping and different as well, if a value is different, once they are present the invoices value as well, value in rupees are also different, much higher, and vice versa. Ghost shipping, either maybe the launderer will not ship the money, will not ship the product, but actually the launderer show he's shipping some products. So this is ghost shipping. Shell company, I will give you small intro. Shell companies, which is during start of the business, there is no significant assets. This company is only in documentations. Actually, there is nothing. So I will explain shell companies and self companies in next lecture in details. So right now, I think so. I just explain a small intro what is actually shell company. Multiple invoicing, like if a launderer ship the product and he just given multiple invoices against same shipping, he are presenting multiple invoices against same shipping. This term as well used for in money laundering. Black market traders. Letter of credit are a credit instrument issued by bank that guarantees payment on behalf of its customer to a third party when certain conditions are met, like exporter and importer both met conditions which they are decided before, then letter of credit is complete. Letter of credit are commonly used to finance export because exporter want assurance that the ultimate buyer of its goods will make payment, and this is given by the buyer's purchase of a bank letter of credit. Actually, letter of credit is assurance which is given from the buyer bank to exporter bank, because they are want some assurance. Like if exporter send the product and later on buyer will say, oh, I don't want to buy the product, and in this case and reduce the risk, that's why letter of credit will be introduced between buyer and seller. Like here is a buyer and here is seller. There is advising bank of seller, here is a issuing bank. This bank is linked with buyer. Actually contract between buyer and seller, and actually letter of credit issuing from the side of buyer bank to advising bank, mean exporter bank. Letter of credit can be also serve as a facade when laundering money through the manipulation of import and export prices. So how can letter of credit affect the money laundering? How can they also affect AML CFT laws? They once actually letter of there is mentioned some amount, but actually there is nothing happened because of buyer and seller may be same person, either may be mutual persons, and they mutual launder the money. They just show to bank they did the shipment. Actually behind it nothing. So they manipulate of import and export prices as well, and they show to banks they did the transaction, they did the shipment, they process the product. So in this way letter of credit also can used in money laundering. Another method of using letter of credit illicit in the conjunction with the wire transfer to bolster the legitimate appearance of a non-existent trade transactions. Funnel account are as well used in money laundering. FinCEN define a funnel account as an individual or business account in one geographic area that is receive multiple cash deposits, often in amount below the cash reporting threshold, and from which the fund are withdrawn in a different geographic area with little time slipping between the deposit and withdrawal. Like suddenly one person deposit the money from different geography, and within few minutes, within few hours, another person withdraw the money from different geographic. Ways to identify possible the funnel account activity include an accountant open in a US state receiving numerous cash deposits of less than 10,000 USD, because there is threshold 10,000, and they deposit the money in funnel account below the threshold, but multiple deposits by unidentified person at branches outside of the geographic region where the account is domiciled. Business account deposit take place in a different geographic region from where the business operates. Individual opening or making deposit to funnel account lack information about the stated activity of the accounts. The account owner or the source of the cash. A business account receive out of state deposit with debt that do not appear to related to its business purpose. Notable difference in handwriting on the pay and amount line, that the signature line on checks issued from an amount that receive out of state cash deposit. Wire transfer or check issued from a funnel account are deposited into or cleared through the US correspondent account of a Mexican bank. So these are different tactics used in funnel account to do the money laundering, because if like one person is deposited from different jurisdiction and withdrawing from different jurisdictions, so in this way actually there is no do not appear to be related business, and even there is not any legitimate sources. They are not presenting like a source of fund, because they are depositing money below the threshold as well. Once you are deposit money below the threshold, there is a little you just need to fulfill CID process. And what is the CID process, I will explain in next lectures. What is CID, what is CDD, what is EDD, what is SDD. These are customer identification documents, customer enhanced due diligence, then the customer due diligence, enhanced due diligence, then special due diligence. I will explain in the next lecture. So let's come to next. Black market peso exchange. Black market peso exchange is a process by which money is in the United States derived from illegal activities purchased by Colombia peso broker and deposit in US account that the broker have established. The broker sell checks and wire transfer draw on those accounts to legitimate businesses which use them to purchase goods and services in USA. While the US is prominently figured the black market peso exchange, the process is not limited exclusively to it. Colombia drug cartel began using the black market peso exchange to convert drug dollar earned in the US to in peso Colombia. Why? It reduced their risk of losing their money through seizures, and they got their money faster, even though they paid a premium to the peso broker. A common method used for initial placement of illicit fund into the financial system was structured deposits in the form of cash, money orders, and other financial instruments. Okay, come here. First step. Colombian cartel sells drugs to US market for US dollars. Actually, they are drug dealers. They sell their drugs against dollars. So once they get the dollar, they want to send this money back to Colombia. How they send? They follow this process. They launder the US dollars. Cartel contact immediately call peso broker. He just go to peso broker, and he just actually his purpose is exchange US to Colombian dollar. Broker take cartel US dollar in exchange for Colombian peso. Broker just exchange the money against dollar to peso. Then broker US implies place the dollar in US banking system. Later on, in fifth, broker offered the US dollar to a Colombian importer in exchange of Colombian peso. Here, once a trader involved in this money, so they are easily launder their money because Colombian importer want to pay the money to in USA against their products as well. They will pay in USA USD. So he want to pay it in USD and he will get the money from brokers. Then importer uses the drug US dollar to buy US goods which are shipped to Colombia. So this is the whole process which is used in black market peso exchange, and the launderer will follow this process and launder their money, because this money is get from illegal sources, like they sell drugs and they get the money and they want to showing this is earned from legitimate resources. So in this way they follow and they will legitimate their money which is gotten from illegal sources. So today topic is closed. Thank you very much for watching, and kindly like, subscribe, share and comment. If you want more information regarding any topic which is related to AML CFT study, you can comment me and I will make a presentation regarding to that topic and will explain for your better understanding. Even if you want any other topic which is related to like camps, related to advanced camps, related to risk management, related to KYC, related to any topic which is under the shade of AML study, you can recommend me. I will make a presentation and will upload for your understanding. Thank you again.